Well, hello there, everybody, and welcome to another video here on Momentum channel. Today, we're going to talk about 3 undervalued high dividend energy stocks, and we're going to get started with the first company here. The first company to review is no other than a company called Chevron. It is traded on New York Stock Exchange with ticker symbol CBX. And Chevron Corporation is an American multinational energy corporation. It was founded in 1984, and it's one of the successor companies of Standard Oil. It is headquartered in San Roman, California, and active in more than 180 countries. You notice here Chevron has a dividend safety score of 65, which is considered to be safe. In terms of the stock price volatility, it has a beta score of 1.03. Any beta score over 1 suggests that the stock is more volatile than the average overall stock market. Chevron currently pays a juicy dividend of 5.31%, and it was last traded at the price of $100.92. It is a mega cap company with a market capitalization of $197 billion. Looking at Chevron's dividend history, you'd notice that they have been paying their dividend uninterrupted for the past 33 years, and in all of those 33 years consecutively, they've actually managed to increase their dividend year over year. When it comes to their payment schedule, Chevron does pay its dividend on a quarterly basis, and it's paid in the months of March, June, September, and December. Their annual payout currently sits at $5.36 per share. Moving on, looking at the valuation for Chevron, their current dividend yield for the stock of 5.31% is about 32% above its 5-year average of 4.03%, which indicates that the stock may be undervalued unless you believe that the company's outlook has weakened. It is also worth noticing that Chevron's forward price to earnings ratio of 12.8 is well below their average 5-year of 18.4 in terms of their forward price to earnings ratio. It's also worthwhile for us to take a look at some other metrics. We don't want to just solely rely on some of those numbers. We are going to take a look at their past 5-year stock price. We want to take a look at their shares outstanding, how many shares they have, and whether they've increased or decreased the number of shares, and their total sales. Looking at their company's total sales, you notice that a little bit of that cyclicality and kind of not necessarily the upward trend. In fact, if you look at it, this is the 10-year trend. Back in 2011, they had their highest kind of annual revenue at 236 billion US dollars, whereas it actually hit a lower range towards 2016 at 103, as well as 2020 previous year at 94.5. But their last 12 months showing some signs of improvement, showing 116 billion US dollars in terms of their annual sales. Looking at the company's outstanding shares, ideally we would like to see a company that their number of shares decreases over time, and in fact that appears to be the case as well for Chevron. In the last 12 months, we are seeing the outstanding shares to be at 1.9 billion shares. The 5-year price for the stock for CVX is at negative 1.37%. In other words, if you bought shares of Chevron 5 years ago, your money would not have grown in terms of the stock price, but rather declined by 1.37%. That may sound kind of not very positive, but at the same time, remember, Chevron is paying their dividends solidly, currently yielding at about 5.3% or so, as you see, and that way at least it's a solid dividend paying company, paying its dividend on a quarterly basis and having increased it consecutively for the past 33 years, as we saw earlier on. Looking at the price prediction for the stock, analysts on TipRanks, 13 analysts covering the stock, there is 10 buy rating and 3 hold rating. The average price prediction 1 year for the stock, 12 months, is at $127.75. If that holds true, that shows an upside of 26.59%, close to 27% upside. And the range and the range for the price prediction by analysts, and the lowest range is at 110, and the highest being at $149 per share. We will also take a look at the price and valuation according to Simply Wall Street. According to analysts on Simply Wall Street, the stock is undervalued as well, by about close to 46% undervalued. And they are having a fair valuation for the Chevron stock at the price of $188, which is much higher than what we saw for the analysts on TipRanks. Moving on, the second company to review in terms of undervalued, high dividend stock in energy sector is a company that pays a juicy dividend of 8.03%. The company is called Enterprise Products Partners. It's traded on New York Stock Exchange with ticker symbol EPD. It also has a safe dividend score of 65, and it's considered to be a large cap company and stock with $49.2 billion. And the last trading price for this stock was at $22.42. And if you look at their beta, which is a measure of volatility, it is less than 1, suggesting the stock is less volatile than the overall market. The beta value being at 0.84 at this time. Enterprise Product Partners is an American midstream natural gas and crude oil pipeline company with headquarters in Houston, Texas, and it is active in oil and gas storage and transportation. Looking at the dividend history for this stock, they have been paying dividends uninterrupted for the past 22 years, and in all those years, they've actually consecutively increased their dividend. They do also pay their dividend on a quarterly basis. However, they pay that in the months of February, May, August, and November. Their annual payout is currently at $1.80 per share. In terms of valuation for the company, their current dividend yield of 8.03 is 25% above their 5-year average of 6.40%, which indicates again that now could be a reasonable time to invest, assuming that the company actually is undervalued, and as a result, the dividend yield perhaps just has shot up, and probably the stock price has not caught up. If you look at the company's forward price, in terms of the forward price to DCF ratio, it is at 7.6, which is below its 5-year average of 10.4. In other words, the stock looks cheap compared to how the market has valued it in the recent years. Moving on, we wanted to take a look at the outstanding shares for the company. Their last 12 months, they are showing 2.20 or 2.2 billion shares, which is showing increasing trend. It's not ideal. Of course, it does happen for a number of reasons, and it can be quite common for different companies. But ideally, I would like to see this number declining. However, this is not necessarily a red flag that you have to necessarily stop investing in the company or kind of put it away altogether. It's just a metric to take a look at and be mindful of. In terms of the total sales for the company, you notice the company in the last 12 months is showing $32.6 billion US dollars in terms of their sales, which is higher than what it was in the year prior to that in 2020. The 5-year stock price trend chart is shown down here, and you notice that if in the past 5 years the stock price has gone down by over 16%. That can be definitely a little bit of a red flag if you're considering this stock, hoping that your stock is gaining some appreciation, which definitely is not the case. But on the other hand, on the contrary to that, you are gaining that solid dividend, and currently, as we talked about, it's over 8%. Moving on, we want to take a look at the price prediction by analysts. According to TipRanks, the average price for 1 year is at $28.67 based on 6 analysts covering the stock, all of which have a buy rating or overall rating of strong buy for the stock. Similarly, if you look at Simply Wall Street, it is also considering this stock to be buy, having a 37.2% undervalued rating for this company with a fair valuation of $35.73 according to Simply Wall Street. On the third company to review is a company no other than TC Energy with ticker symbol TRP. It is traded both in on New York Stock Exchange. Also, it is available as a Canadian stock on Toronto Stock Exchange. TC Energy is showing a dividend safety score of 61, and it is considered to be a safe dividend payer at this time. Their dividend yield is at 5.77%. The last trading price for TC Energy on the New York Stock Exchange was $48.10 USD. It is considered to be a large cap company with $47 billion market cap. As for volatility, it is showing a beta score of 0.76, proving to be less volatile than the other two companies that we reviewed so far. TC Energy operates as an energy infrastructure company in North America and operates through Canadian natural gas pipelines, US natural gas pipelines, Mexico natural gas pipelines, liquid pipelines, and power and storage segments. The company was formerly known as TransCanada and changed its name to TC Energy in May 2019. TC Energy was incorporated in 1951 and is headquartered in Calgary, Alberta, Canada. As for the dividend history, the company has been paying its dividend for the past 20 years without any reduction. And in fact, all those 20 years, they have increased their dividend year after year. They do pay their dividend quarterly, but it's paid in the months of January, April, July, and October. In other words, if you consider these three different companies that we've covered, for the most part, you are picking different months to collect that dividend income from each one of them, as their dividend months kind of is not the same, and it evolves and changes for the three different stocks. TC Energy does pay their annual payout of $2.78 per share at this time. Looking at the valuation, TRP's current dividend yield of 5.77% is 19% above its 5-year average of 4.84, which indicates that now could be a reasonable time to invest unless you believe that the company's outlook has weakened. Furthermore, TC Energy's forward price to discounted cash flow ratio of 8.8 is close to its 5-year average of 9.2. The market appears to be valuing the stock similar to how it has in the past, suggesting that TRP could be fairly priced if you believe in its long-term prospects remaining solid. We want to take a look at their outstanding shares as well as total sales. You notice that the company's outstanding shares has grown. Last 12 months is at 953 million shares. Ideally, we would like this number to grow, but this is not the case here. In terms of the total sales, though, they are showing a better kind of trend compared to the past two companies we saw. For the most part, it's an upward trend compared to the past 10 years. The last 12 months showing $13.1 billion in sales. Also, the 5-year price for the stock price is showing to be slightly positive, almost close to 1% return in the past 5 years. Definitely not the greatest company in terms of the stock price appreciation. Nonetheless, if you buy into energy stocks that we talked about in this video, you're more so counting on their solid dividend payment amount, which is also quite juicy and considerable over time. All of these companies that we talked about have dividends over 5% at this time, with one of them actually being over 8%, which is just remarkable. And lastly, looking at TC Energy's stock price prediction by analysts. There are 12 analysts on TipRanks covering the stock, with 8 of them having a buy rating and 4 of them having a hold rating, giving the stock an overall moderate buy, with the average 12 months price target of $55.87. And if that holds true, that shows an upside of 16.15 or roughly 16% upside for the stock. The price range for the stock, according to analyst estimates, it is between $49.48, which is again higher than the last trading price for the stock, and the highest range being at $61.45 at this time. There you have it, folks. A quick review of 3 high dividend paying stocks in the energy sector that have been paying their dividends solidly. They are considered to be also undervalued stocks based on our research that we've walked you through. We hope you found this video beneficial and you gained something of value from it. Please be sure to do your own due diligence and let us know what companies or stocks are you considering to add to your portfolio at this time. Are you investing in dividend stocks? We would love to hear from you, so be sure to leave us a comment down below. I hope you found this video beneficial, and if you did, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And of course, don't forget to subscribe to us here on Momentum Finance. We post every week several videos about investing in the stock market, including dividend stocks, growth stocks, penny stocks, and other investing avenues, as well as looking into ways to reach financial freedom. Thank you, and we hope to see you next time.